to Business Today Television from the India Today studios, where we have with us two of the budget makers, as we call them, CBDT Chairman Nitin Gupta and CBIC Chairman Mr. Vivek Johri. Two people, both of them in the news, but I will have to start to my left with Mr. Gupta. Mr. Gupta, the big question that everyone is asking, you've proposed certain amount of tax giveaways, you've rejigged the slabs, but only in the new income tax regime, which is the alternative form which you tried from last year. And there are two questions within that. How confident are you that there will be a transition to that regime? Because a lot of people may still be not willing to surrender the exemptions that they enjoy.
The new regime has been examined in greater depth, and what we have proposed is that the new regime will attract taxpayers to be opted by them. Rather, this will be the default scheme, default regime, and taxpayers, if they don't want to follow it, they can opt for the old regime. So the default will be the new regime. Considering that the tax rates have been reduced, the slabs have been widened, the rebate has been increased, we are hopeful that there will be switch over from old regime to the new regime, because at every level, at every income level, there is a benefit of the tax. So be it a small taxpayer or a large taxpayer will be benefited by switching over to the new regime.
Mr. Gupta, is this transition likely and switchover likely to happen in one assessment year, or will it pan out over several?
I think it will happen in one assessment year. There could be some cases which may find that the old regime is beneficial to them because of maybe house property, the mortgage which they have taken, could be on that account. But those as per our estimates, the numbers are not very large, and therefore we think that there will be major switch to the new regime.
Before I go to the indirect tax part, one more quick follow-up on this. You are the taxman, you know these numbers very well. Our viewers across our India Today platforms would really appreciate this clarity, because I am saying this, most of the questions on the tax side pertain to this, where people are just trying to understand what has been done. ATC, 50,000 of new pension section, I am talking about the private sector, medical, plus home loan, like you said. There is a certain saving and lifestyle pattern which is ingrained with tax savings also. You are seeking to upend that completely. Why should I buy into the new regime?
No, because now the liberty is with the taxpayer, whether he wants to go to the new regime or old. And if you go to the new regime, you are saving some tax. So there is money in the pocket which can be utilized whatever way you want to invest money into the products. As of now, you are forced to buy a particular product because of the tax saving, which you will be at liberty, the amount which you would like to invest in any product, you can.
So 30 seconds on this. The amount of revenue foregone that was indicated of around 35,000 odd crore. Why has such a number been given? Because there are uncertainties around how many will shift and in what assessment year it will happen. So why categorize it as a sort of boost for consumption?
The estimates which are there of around 40,000 crore which we may be losing on this switching over has been on a realistic basis, looking to the numbers of these different slabs of the taxpayers and the deduction pattern as well, because we have the data of ATC or ATD or whatever we have, and what we have factored into every deduction which a normal taxpayer takes. So if a taxpayer is having income of 10 lakhs, he can't invest, let us say, 4 lakh of rupees into the property as well as the ATC deductions. So we have factored into everything, and it is a fair estimate that around 40,000 crore would be the revenue foregone on this account.
Okay, and a lot of people who are other stakeholders will perhaps want to debate this, and viewers, on the 6th of February, we'll get you much more greater fine print and clarity. The boss of our indirect taxation system has been waiting by patiently. Pre-GST, I think many of the questions would have first come to you. But what really has been the thrust of the indirect taxation proposals of this budget?
Thank you so much. I think the major thrust, I'll talk about customs duties first,
Yes.
has been on simplification. And this is a theme which we've been addressing for the last couple of budgets. The idea there is twofold. In this budget, one of the major changes that I would like to talk about and highlight is the reduction in the number of rates. As you're aware, it is received sort of wisdom now that the more the number of rates, the more the chances of disputes and, complications. So we've been able to achieve a very big reduction, which is from 21 rates. We've been able to bring down the rates of basic customs duty to 13. That, in my view, is quite a big change, which will definitely lead to simplification of the rate structure. The linked issue is of review of exemptions. And if you recall, the finance minister had announced last year that all customs duty exemptions will be reviewed every 2 years, and those which have been there on the book for a long time will also be reviewed. So we've done, once again, a very major review of customs duty exemptions from the point of view of simplifying the rate structure. So this is on simplification. Other than that, the thrust of the budget on indirect taxes has been on promoting domestic value addition and deepening value addition so that there's greater linkage with global value chains. The prime example which I would like to place before you is mobile phones. And I was looking at some data on mobile phones, and FM also alluded to it in her budget speech this morning. There's been a very robust growth in the production of mobile phones in the country. And roughly, I think we are doing about 2,75,000 crore worth of mobile phones, of which about 15% get imported, very broad figures.
And these are components, 15% includes components.
Yes, but what we have done over a period of time, and this budget takes that theme forward, is that we've dropped the duties on raw materials and sub-assemblies that go into the manufacture of mobile phones. And gradually we've deepened the value addition so that if some sub-assemblies were being imported in the past, to give you an example, a camera module, which is now an indispensable part of a mobile phone, was being imported entirely. Over a period of time, we've given exemptions, and this year too, on components that go into the manufacture of camera modules, for example. So the sub-assemblies also will now get manufactured in the country, and which will eventually contribute to value addition in the mobile phone sector. Similarly, exemptions have been given on certain key chemicals, ethyl alcohol, denatured ethyl alcohol being one, which goes into the manufacture of a large number of organic chemicals.
Absolutely.
So that has also been, the duty has been dropped with a view to do two things. One, promote domestic production of chemicals, and secondly, encourage and further give a boost to the blending of fossil fuels with ethanol.
Mr. Johri, just explain to our even the non-business audience who is listening in, what you have just told us, that value addition in some ways is also job creation, if you were to stretch it in economic terms. One of the broader issues that some people have been raising about our customs duty changes over the past few years is protectionism. If that question were to be put to you today, is India less protectionist through the customs duty prism today versus earlier? How would you respond?
No, there are a couple of, thank you for that question. I think it's important to respond to this. There are two reasons why I believe that we've not turned protectionist, contrary to what is often stated by commentators. And the reasons are as follows. First of all, the overall rate structure of customs tariffs has not been changed or calibrated upwards. So if you have, for example, I told you there were 21 rates, until last year, now down to 13. It is not as if those 21 rates, the entire rate structure was enhanced or increased.
Has it been compressed downwards?
Yes. So that is one. Secondly, whatever rate increases have happened very selectively in identified sectors, which in our view are strategic from the point of view of domestic production. And the third element is that the rate increases wherever they've happened, to give you an example again of mobile phones or toys or, batteries and those kind of things, they've been given with a definite time frame in mind. So under the phased manufacturing program, for example, which we are doing for electronic vehicles, for medical equipment and a whole lot of other chemicals, the idea is that we pre-announce the trajectory of tariffs with lower tariffs on raw materials and intermediates and slightly higher tariffs on finished product, so that the value addition happens in the country and the industry knows that within 2 years or 3 years they have to scale up.
Mr. Johri, I don't think anyone globally would have had any arguments with that kind of philosophy, because that's what is in some ways Atmanirbhar Bharat from a manufacturing point of view.
Yes.
Just one quick point, and I know this is not a budget question, so please do permit me to ask you. The promise of a good and simple tax outside of the budget, in the hands of the GST Council, any visibility you can offer in terms of what is likely to come up in the future?
No, in fact, there are provisions in the budget. In the finance bill, there are decisions which the GST Council took at the last meeting, which we are now giving a legal...
To give them effect.
Yes, to implement those. And one very good example, which I would like to place before the audience, has to do with prosecution and compounding of offences. And one of the things that is often said about the GST regime is that it's complex and it gives too much discretion to officers, and there are prosecutions which are mindless, etc. Now, what we've tried to do there are two things. So, in our bid to decriminalize tax laws, on GST law, what we've done is there are 2 or 3 specified offences which we've removed as, from the statute as being offences.
And that with effect through the finance bill?
Yes, through this finance bill.
Okay.
For example, falsification of documents, not tendering the information that is asked for by the tax department, preventing a public servant from performing his duties. These are offences that are already addressed through other laws. So the council felt that there was no need to continue with them as offences under the GST law. The second thing is, and that's another big one, is that we've enhanced the threshold for launching prosecutions. So where the tax amount exceeds 2 crore now, 2 crore and above, alone,
only then.
Yeah, only then do we consider.
So every small sort of misdemeanor, if not a deliberate offence, doesn't get prosecuted. I know I'm running out of time, but just one final question. Online gaming. A lot of Indians taking to gaming. Last year, crypto was that one big item. I'm not going there, but on online gaming, what has been done? Because it's clearly needs some policy clarity. What has been done today?
Very, very pertinent question. In the present era, when online gaming is on the rise, and we have tweaked the laws to see to it that the gaming industry sustains. The tax rate remains 30%, but the way it is to be the operated will be has been put in the budget, and now the TDS is on any amount which a person earns, but the
not the entire.
Yeah, it is after set off of any loss which it incurs, the profit which it gains, and the losses which it incurs. These are set off, and only on the net amount the deduction will be made. The taxing regime will also be simplified in the same manner, but the tax rate remains flat 30%. So that is the way. I think it is a different treatment from what it has been to the crypto thing.
Absolutely. And as I wind down this conversation, viewers, on my side, the 2 taxmen responsible for taxing us, and what we didn't cover is a sin tax, a further enhancement, for example, on tobacco, and that sort of fits in with the better. Absolutely, and that's where we leave this. I'm going to thank Mr. Gupta and Mr. Johri for their time, and hopefully, viewers, we'll have them both back at the Business Today, India Today post-budget summit, which Finance Minister Nirmala Sitharaman will be attending and addressing on the 6th of February to get more insight and take your questions. If you've been, thank you very much for watching. Thank you, sirs, for your time today. Thank you.